Hi everyone, welcome to this month's Equity Outlook. I'm Shalini and joining me today is Shreyash Divalkar. In today's episode, Shreyash will walk us through the market developments over the past month, upcoming triggers, and the key investment opportunities you should watch out for. Alright Shreyash, let's begin. What's been the most significant development this month on the global front?
Thanks, Shalini. The biggest global trigger has been US presidential elections. Donald Trump secured a comfortable victory, returning as the President of the United States. Following his win, US equities, particularly the Dow Jones, have risen by around 7%.
That's a significant jump. What kind of impact could this have on the countries like India?
One key impact to monitor is the possibility of trade tariff imposed by the Trump administration, which could affect countries like China and Mexico. For India, this might create opportunities through the China Plus One strategy, as we saw back in 2016 when companies began diversifying their supply chains.
Definitely something to keep an eye on. Shifting focus back to India, how have our markets performed amidst this global backdrop?
Indian equities have shown some resilience after a volatile October and the first half of November. From the 11% decline we saw from record highs, the market has recovered approximately 3%. However, foreign institutional investors have continued to remain net sellers for the second consecutive month, withdrawing $2.5 billion in November following $11 billion in October. That said, the intensity of these outflows has reduced significantly.
Well, that's a relief. But what's driving these outflows, Shreyash? High valuations, geopolitical concerns, or is it something else?
It's a combination of factors. High valuations, muted earnings results, and evolving geopolitical landscape have contributed to the outflows. This earnings season, in particular, was disappointing, with both top line and bottom line growth under pressure. Additionally, a slowdown across consumption, capex, and exports has resulted in a broad-based impact on earnings.
Also, what are your key concerns about the recent slowdown in India's GDP growth and private consumption?
India's GDP grew by 5.4% in the second quarter of FY25, the slowest since Q3 FY23. The slowdown has been evident in both capex and private consumption. Consumption growth, despite declining, is relatively strong at 6% versus 7.4% in first quarter of FY25, while investment growth decelerated to 5.4% from 7.5% in the same period. GPA slowed to 5.6% from 6.8%, with net indirect taxes continuing to decline in the current quarter. By sector, industry remained weak, with manufacturing and electricity being a drag. Services sector remained steady at 7.1%.
Sounds like a challenging environment, Shreyash. For investors, how does the current market environment present an opportunity?
Absolutely, Shalini. Periods of consolidation and market declines can be good time for long-term investors to add to their existing holdings. Of course, it's important to remain selective and focused on quality.
Well, Shreyash, heading into the last month of 2024, what are the key triggers to watch out for?
With the major events like the US election and Maharashtra state election behind us, the focus will shift to domestic factors. Markets will closely monitor the outcome of the RBI's monetary policy against a backdrop of rising inflation and slowing growth.
And from a thematic standpoint, how are we positioned right now?
We are maintaining our overweight stance on consumption and investments while remaining underweight on exports. Valuations in the mid and small cap are still relatively high, whereas large cap are more reasonably priced. Sector-wise, we retain an overweight position in financials, have increased our exposure to pharma, and have trimmed our positions in industrials.
That's insightful, Shreyash. Thanks for breaking that down. Any parting advice for our viewers?
Stay focused on the fundamentals and don't let short-term volatility deter your long-term goals. Keep a close watch on key triggers and as always, diversify your portfolio wisely.
Well said, Shreyash. Thank you for joining us today. And thank you all for tuning in to this month's Equity Outlook. See you next month.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.